Bitcoin. It's a word that sparks curiosity, confusion, and maybe even a little bit of fear. Is it digital gold, a speculative bubble, a glimpse into the future of finance? The truth is, Bitcoin is all of these things and more. It's a decentralized digital currency, which means no banks or governments control it. It exists only on a computer network, secured by cryptography. Since its inception in 2009, Bitcoin has gone from a niche experiment to a global phenomenon. It's made headlines for its meteoric price rises and stomach-churning crashes. It's been embraced by tech visionaries and Wall Street giants alike. This is where our journey begins. We're going to demystify Bitcoin, exploring its past, present, and future. Imagine a world where you can send money across borders instantly with minimal fees, where you control your own wealth without relying on banks or financial institutions. This is the promise of Bitcoin and the decentralized world it represents. Bitcoin challenges the very foundations of traditional finance. It operates independently of central banks, governments, and other intermediaries. Its value is determined by supply and demand, not by the whims of policymakers. And its decentralized nature makes it resistant to censorship and control. For individuals, Bitcoin offers a way to escape inflationary currencies and take control of their financial destiny. For businesses, it provides a faster, cheaper, and more secure way to transact. Over the course of this guide, we'll embark on a comprehensive exploration of Bitcoin. We'll trace its journey from its humble beginnings to its current status as a global financial force. We'll break down the complexities of blockchain technology, the ingenious invention that underpins Bitcoin. You'll understand how this revolutionary system works and the potential it holds for transforming industries beyond finance. We'll also delve into the practical aspects of Bitcoin. We'll discuss how to buy, sell, and store it safely. Whether you're a complete beginner or a seasoned crypto enthusiast, this guide will serve as your ultimate resource for understanding Bitcoin in 2025. Picture this, it's 2008. The global financial system is teetering on the brink of collapse. And in the midst of this chaos, a paper appears online, like a digital message in a bottle. This was a manifesto, a blueprint for a new financial order. A system called Bitcoin, a peer-to-peer electronic cash system penned by the enigmatic Satoshi Nakamoto. Satoshi's creation proposed a radical solution, a decentralized digital currency free from government control and the whims of Wall Street. It was a bold vision, a direct challenge to the established financial order. January 3rd, 2009. Mark your calendars, folks, because this is when history was made. This is the day the very first block of the Bitcoin blockchain was mined, the legendary Genesis block. Satoshi embedded a message within the Genesis block. Chancellor on brink of second bailout for banks. Bitcoin wasn't just about creating a new currency, it was about offering an alternative to a financial system that many felt had failed them. It was a digital middle finger to the powers that be, a declaration of independence for the internet age. And so, with that rebellious spirit encoded into its very DNA, Bitcoin took its first baby steps into the world. Let's fast forward to May 22nd, 2010, a day that lives in Bitcoin lore not for a dramatic price surge or a regulatory earthquake, but for something far more relatable, pizza. On this fateful day, a programmer named Laszlo Hanyecz made history by buying 2 Papa John's pizzas for 10,000 bitcoins. At the time, those bitcoins were worth about $40. Today, those 10,000 bitcoins would be worth hundreds of millions of dollars, making those pizzas the most expensive culinary indulgence in human history. This event, now celebrated annually as Bitcoin Pizza Day, marked the first documented real-world transaction using Bitcoin. It showed that this digital currency could actually be used to buy stuff. Like any teenager finding their footing, Bitcoin's early years were a mix of awkward phases and rebellious streaks. From 2011 to 2013, it gained notoriety as the currency of choice for online marketplaces like Silk Road. This association with the dark underbelly of the internet gave Bitcoin a bit of a shady reputation. Governments and regulators eyed it with suspicion, while mainstream media often portrayed it as a tool for criminals and hackers. But amidst the controversy, legitimate organizations started to take notice. These early adopters saw beyond the sensational headlines and recognized Bitcoin's potential. Word of this digital rebellion started to spread. What began in the shadowy corners of internet forums soon found its way into the hands of tech enthusiasts, libertarians, and anyone disillusioned with the traditional financial system. These early adopters saw Bitcoin as more than just an investment. They saw it as a movement. They believed in its potential to create a more equitable and transparent financial world. They saw the bigger picture, the potential for Bitcoin to disrupt industries and empower individuals. And as more people joined the movement, the Bitcoin network grew stronger and more resilient. Let's talk about a little something that makes Bitcoin truly unique in the world of money: its limited supply. Unlike traditional currencies, which governments can print with reckless abandon, Bitcoin has a hard cap. There will only ever be 21 million Bitcoins in existence. Think of it like a rare vintage wine, but instead of grapes, it's lines of code. Some speculate it's an arbitrary choice, a digital quirk that adds to Bitcoin's mystique. Whatever the reason, this finite supply is a fundamental part of Bitcoin's DNA. This scarcity has profound implications for Bitcoin's price and its role in the global economy. So how do these Bitcoins come into existence? They're created through a process called mining. Powerful computers solve complex mathematical problems to add new blocks to the Bitcoin blockchain. Every 210,000 blocks, roughly every 4 years, the reward for mining a block is cut in half. This halving event ensures that new Bitcoins are introduced into circulation at a decreasing rate over time. The first halving occurred in 2012, followed by the second in 2016, the third in 2020, and the most recent one in 2024. Each halving reduces the rate at which new Bitcoins enter the market, gradually constricting supply. This mechanism is a core feature of Bitcoin's design. The halving has historically been followed by periods of significant price volatility in the Bitcoin market. Some analysts believe this is due to the basic principles of supply and demand. With fewer new Bitcoins entering the market, but demand remaining constant or even increasing, the price naturally tends to go up. Emotions run high in the world of crypto, and the halving often triggers a wave of speculation, hype, and FOMO, fear of missing out. This can lead to rapid price increases as investors pile in, hoping to ride the wave to riches. The market doesn't always behave rationally, but the halving is a key event to watch. The halving isn't just about short-term price movements, it's about the long-term value proposition of Bitcoin. The limited supply, combined with the halving mechanism, means that Bitcoin is inherently deflationary. Unlike traditional currencies, which tend to lose value over time due to inflation, Bitcoin is designed to become more scarce and potentially more valuable as time goes on. This has led many to view Bitcoin as a form of digital gold. Like its precious metal counterpart, Bitcoin is scarce, durable, and divisible. The underlying principles of scarcity and limited supply give it a unique appeal. The Bitcoin halving is a fascinating phenomenon. It's a pre-programmed event written into the code, yet its impact on the market is anything but predictable. It creates a sense of anticipation, a countdown clock that keeps the crypto world on its toes. Will the next halving in 2028 trigger another bull run? sending Bitcoin to new all-time highs? Or will it be a non-event, a blip on the radar of a maturing market? Nobody knows for sure. And that, my friends, is part of what makes Bitcoin so exciting, so frustrating, and so utterly captivating. The allure of predictable unpredictability keeps everyone guessing. Let's dive into the engine room of Bitcoin, the tech that makes it all tick, the blockchain. Think of the blockchain like a giant public ledger, except instead of being kept in a bank vault, it lives on a network of computers around the world. Every time someone sends or receives Bitcoin, that transaction is recorded in a block on this ledger. Each block is linked to the one before it, creating an unbreakable chain of information. Because the blockchain is distributed across so many computers, it's incredibly secure. This distributed nature also makes the blockchain transparent. Anyone can view the transaction history, but no single entity has control over it. This brings us to a big, important word in the world of Bitcoin decentralization. In simple terms, it means no single entity, like a government or a bank, has control over the network. With Bitcoin, you don't need to trust a bank or a government to handle your money. The network itself, powered by math and cryptography, acts as the trusted intermediary. This means Bitcoin is resistant to censorship. This freedom has made Bitcoin a powerful tool for people living under oppressive regimes and in economically unstable countries. Now let's address the elephant in the room, transactions per second. Bitcoin's blockchain, while secure, isn't exactly known for its speed. Early on, this wasn't a big deal, but as Bitcoin's popularity grew, so did transaction times and fees. Enter the Lightning Network, a Layer 2 solution designed to make Bitcoin transactions faster and cheaper. Think of it like a high-speed rail line built on top of existing infrastructure. It allows users to make off-chain transactions, meaning they don't have to be recorded on the main blockchain. By 2025, the Lightning Network has gained significant traction. Major exchanges have integrated it, making it easier for everyday users to send and receive Bitcoin instantly and with minimal fees. This has been a game changer for microtransactions and everyday purchases, bringing us closer to a world where you could buy a cup of coffee with Bitcoin. So we've explored the ins and outs of Bitcoin's blockchain, but the story doesn't end there. You see, the technology that underpins Bitcoin has far-reaching implications. It's not just about digital currency, it's about revolutionizing the way we think about trust, transparency, and the flow of information. Blockchain technology has the potential to transform a wide range of industries, from supply chain management and healthcare to voting systems and digital identity. Imagine a world where you know exactly where your food came from, where medical records are secure and easily accessible, where elections are tamper-proof, and where you have complete control over your own data. While Bitcoin is the most well-known application of blockchain technology, it's just the tip of the iceberg. The true potential of this revolutionary invention is still unfolding, and the next few years will be crucial in determining how it shapes our world. For years, Bitcoin lived primarily in the digital domain. It was the darling of tech enthusiasts, libertarians, and those seeking an alternative to the traditional financial system. Corporations, for the most part, watched from the sidelines, unsure of what to make of this volatile and disruptive digital asset. But as Bitcoin matured, its price soared, and its underlying technology gained wider acceptance. The corporate world began to take notice. What was once dismissed as a passing fad, a plaything for tech geeks, was now being recognized as a potential game changer, a force to be reckoned with. This marked a pivotal shift in Bitcoin's journey. No longer was it confined to the fringes of the financial world. Major corporations, with their vast resources and global reach, began to dip their toes into the crypto waters, testing the temperature and exploring the possibilities. Some were drawn by the allure of potential profits, seeing Bitcoin as a high-growth investment opportunity. Others were intrigued by its technological underpinnings, recognizing the transformative power of the blockchain. And still others saw it as a way to hedge against inflation, and diversify their portfolios. Section 2, MicroStrategy, all in on the Bitcoin bet. Leading the charge was Michael Saylor, the outspoken CEO of software company MicroStrategy. In 2020, Saylor made a bold move, announcing that his company would be converting a significant portion of its cash reserves into Bitcoin. This wasn't just a small experimental allocation. MicroStrategy went all in, pouring hundreds of millions of dollars into the digital asset. Saylor, a self-proclaimed Bitcoin maximalist, believed that Bitcoin was the best store of value in a world awash in inflationary monetary policies. His bet paid off, at least initially. As the price of Bitcoin skyrocketed, MicroStrategy's holdings swelled in value, generating billions of dollars in paper profits. Saylor became a hero in the crypto community, hailed as a visionary who understood the true potential of Bitcoin. Of course, it wasn't always smooth sailing. When Bitcoin's price took a tumble, as it often does, MicroStrategy's balance sheet felt the pain. But Saylor remained undeterred, continuing to accumulate Bitcoin even as critics questioned his strategy. Section 3, Tesla and Twitter. The Elon and Jack show. No conversation about Bitcoin is complete without Elon Musk and Jack Dorsey. Musk's Tesla accepted Bitcoin, then reversed due to environmental concerns. Dorsey, former CEO of Twitter and Square, consistently supports Bitcoin. He integrated Bitcoin into Cash App and supports the Lightning Network. Section 4, Wall Street wants in, ETFs and the institutional wave. Initially hesitant, Wall Street is now embracing Bitcoin as its market cap grows and infrastructure matures. Financial giants like Fidelity, BlackRock, and Goldman Sachs are offering Bitcoin services. Bitcoin ETFs allow investors to gain exposure without directly managing the asset. The SEC has been slow to approve a spot Bitcoin ETF, but approval seems likely. A spot Bitcoin ETF would be a watershed moment, validating Bitcoin in the global financial system. Remember that old-timey gold rush? Swap the pickaxes for smartphones and the dusty trails for the internet. Welcome to the digital gold rush, where Bitcoin is the shiny nugget. It's digital gold for the digital age. Bitcoin fits neatly in your digital wallet, ready to be spent or traded. Let's talk about inflation. Remember when a dollar could buy you a coffee? As governments print more money, the dollar's value shrinks. Enter Bitcoin, the digital knight against inflation. Only 21 million Bitcoins will ever exist. A finite supply means no inflation. Bitcoin's price can fluctuate, but it's a hedge against inflation. Remember those pesky international money transfers? The ones that involve exorbitant fees, endless paperwork, and waiting periods longer than your last online dating experience. Yeah, Bitcoin's not a fan of those either. See, Bitcoin doesn't care about borders, passports, or which currency you prefer. It's a global currency, accessible to anyone with an internet connection. This makes it an incredibly powerful tool for people living in countries with unstable currencies or limited access to traditional banking services. Imagine being able to send money to your family overseas instantly, with minimal fees regardless of where they live or what their local currency is doing. That's the promise of Bitcoin, a truly global financial system that bypasses the gatekeepers and empowers individuals. Of course, we're not quite there yet. Regulation is still catching up, and not everyone is comfortable with the idea of transacting in a decentralized digital currency. But as adoption grows and technology improves, Bitcoin has the potential to revolutionize the way we move money around the world. Riding the Bitcoin roller coaster. Fasten your seatbelts, folks. Bitcoin's wild price swings can induce euphoric highs and gut-wrenching drops. Remember those halving events? They add extra loops to the ride. Take late 2017, for example. Bitcoin soared towards $20,000, then came the inevitable dip. By early 2018, Bitcoin had lost over 80% of its value. It's a wild ride, full of exhilarating highs and terrifying lows. Hold on tight. Section 2, 2025. Finding calm after the halving storm. As we cruise into 2025, the crypto world is catching its breath after the latest halving event in 2024. The market, as always, reacted like a caffeine-fueled squirrel, darting up and down with dizzying speed. But, amidst the chaos, a sense of cautious optimism has emerged. Bitcoin, despite its penchant for drama, has shown remarkable resilience over the years. It has weathered storms that would have sunk lesser assets, emerging stronger and more battle-tested each time. And while past performance is never a guarantee of future results, it does suggest that Bitcoin is here to stay. Of course, volatility is still part of the game. As I write this, Bitcoin is hovering in the $20,000 to $30,000 range, a relative oasis of calm compared to the wild swings of previous years, but that doesn't mean it's time to get complacent. The crypto market is like a sleeping dragon. It might seem peaceful now, but it could awaken at any moment, breathing fire and wreaking havoc on your portfolio. Section 3, charting the uncharted. From tea leaves to fundamentals. How do you make sense of this digital beast? Predict the unpredictable? If you find a crystal ball that works, let me know. Until then, we're left with art, science, and gut feeling. Technical analysts stare at candlesticks, moving averages, and Fibonacci retracements. They speak in MACD, RSI, and Bollinger Bands, searching for patterns and signals. Fundamentalists believe Bitcoin's value is driven by its limited supply, decentralized nature, and growing adoption. They analyze network data, regulatory developments, and macroeconomic trends. Who's right? Who knows? There's no single right way to analyze Bitcoin. It's influenced by many factors, both rational and irrational. The best approach combines technical and fundamental analysis with skepticism and risk management. Section 4, to hodl or not to hodl, timing the Bitcoin tango. To hodl or not to hodl. Hodl means holding Bitcoin long-term, ignoring price swings. Hodlers are true believers, seeing Bitcoin as revolutionary. Traders, on the other hand, thrive on volatility, buying low and selling high. Which approach suits you? It depends on your risk tolerance and goals. Invest responsibly, diversify, and never bet more than you can afford to lose. Section 1, the regulatory maze. Regulations, those pesky rules and guidelines that governments love to impose on things they don't fully understand. The crypto world, with its decentralized ethos and disregard for traditional financial boundaries, has always had a bit of a love-hate relationship with regulators. It's like a game of cat and mouse, except the cat is wearing a suit and tie. And the mouse is a decentralized network of computers that can't be easily caught. Governments around the world are grappling with how to handle this new and disruptive technology. Some, like El Salvador, have embraced Bitcoin with open arms, seeing it as a path to financial inclusion and economic growth. Others, like China, have cracked down hard, banning crypto exchanges and mining operations. The United States, as always, seems to be somewhere in between, with regulators sending mixed signals and lawmakers still trying to figure out what Bitcoin even is. This regulatory uncertainty creates a lot of headaches for businesses and investors alike. It's like trying to build a house on shifting sands, never quite knowing when the rules might change or what the consequences might be. In the digital world, security is paramount. In crypto, fortunes can be made and lost with a few keystrokes. Remember Mt. Gox, the infamous Bitcoin exchange hack? Since then, security has improved with hardware wallets and multi-signature protocols. But threats like hacks and phishing attacks remain. Use strong passwords, enable two-factor authentication, and store crypto in reputable wallets. Let's face it, humans aren't exactly known for their rationality, especially when it comes to money. And in the volatile world of crypto, where fortunes can be made and lost overnight, emotions tend to run high. When Bitcoin's price is skyrocketing, FOMO, fear of missing out, sets in. People pile in, eager to get their piece of the pie, often throwing caution and common sense to the wind. This buying frenzy only pushes the price higher, creating a self-fulfilling prophecy of irrational exuberance. But what goes up must come down, at least in the crypto market. And when Bitcoin's price starts to tumble, panic sets in. People rush to sell, desperate to cut their losses before their digital fortunes evaporate. This selling pressure only accelerates the decline, turning a correction into a full-blown crash. The key is to not let your emotions get the best of you. Don't get caught up in the hype, and don't panic when the market takes a dip. Remember, Bitcoin is a long game. If you believe in its long-term potential, ride out the volatility and focus on the fundamentals. Section 4, Navigating the Risks, a Dose of Reality. Bitcoin is a roller coaster ride, enough to make even seasoned investors sweat. But before you swear off crypto, consider the bigger picture. Bitcoin represents a shift in how we think about money. It's decentralized and operates independently of governments. It has the potential to reshape the global economy. But it's risky, so invest cautiously and do your research. The crypto world is full of opportunities and risks. Buckle up and keep your wits about you. Section 1. The crystal ball of crypto. Predicting the future is a fool's game, especially in the crypto Wild West. It's a land of rapid innovation, regulatory curveballs, and enough hype to launch 1,000 rockets to the moon. Looking at you, Elon. But hey, let's put on our speculative hats and take a peek into the swirling mists of Bitcoin's potential future, shall we? The year is 2028. Imagine a world where ordering a pizza with Bitcoin is as commonplace as paying with Apple Pay. The Lightning Network, now a well-oiled machine, zips transactions across the globe faster than you can say decentralization. Central banks are scrambling to catch up, launching their own digital currencies. But Bitcoin, with its first-mover advantage and die-hard community, remains the king of the crypto hill. It's become the ultimate safe haven asset, a digital fortress protecting wealth from the ravages of inflation and economic turmoil. Of course, this is just one possible future, an optimistic vision of Bitcoin's potential. There are other less rosy scenarios where regulation stifles innovation, quantum computing cracks the code, or a new, even shinier crypto emerges to steal Bitcoin's thunder. Section 2. So, you want to dance with Bitcoin? So, after this whirlwind tour of the Bitcoin universe, you're probably wondering, should I buy some of this digital gold or what? Well, my friend, that's a question only you can answer. If you're looking for a get-rich-quick scheme, a surefire way to turn your spare change into a Lamborghini, then Bitcoin might not be for you. Or maybe it is, but proceed with extreme caution. But if you're intrigued by the potential of a decentralized future, if you believe in the power of technology to disrupt outdated financial systems, if you're willing to embrace a bit of risk for the chance to be part of something truly revolutionary, then perhaps Bitcoin deserves a place in your investment portfolio. Remember though, with great power comes great responsibility, or something like that. Don't bet the farm on Bitcoin, or any investment for that matter. Diversify, do your research, and only invest what you can afford to lose. Section 3. Until next time, crypto explorers. And there you have it, folks. Our wild ride through the past, present, and potential future of Bitcoin has come to an end. We've explored its mysterious origins, its revolutionary technology, its volatile price swings, and its potential to reshape the very fabric of finance. We've also learned about the importance of security, the dangers of FOMO, and the need to approach this exciting but risky asset class with a healthy dose of caution. But most importantly, we've seen that Bitcoin is more than just a digital currency. It's a movement, a community, a glimpse into a future where the power of finance is in the hands of the people. Thank you for joining me on this adventure. If you found this video helpful, don't forget to give it a thumbs up. Subscribe to the channel for more crypto insights, and let me know in the comments below what you think about the future of Bitcoin. Until next time, stay curious, stay informed, and stay invested in the future of finance.